Good morning. Good morning. How's everybody doing this morning? Morning, everyone. Welcome to Wednesday, the 19th of March, FOMC Day. Hey, John, how are you? So, today, hang on a sec, it's more people here. Welcome, everyone, to our Microefutures Globex live trading education stream. I'm JJ, and this is a place where we cut through all the double talk and gibberish at Microefutures to help regular people earn a living in this business. So, what we're going to do is we're going to do step by step this morning on how I look at the market every time I come in. Okay? So, the first thing that we need to do is take a look at where we are. And we have in our room, I did a video called a market awareness video. Okay? Which helps traders understand what they are going to do business in before they go and do business. Everybody has a trade plan, which is great, but nobody actually has a checklist or a watch list of what they go through every day to determine how they should manage their expectations and then therefore manage their trading. Okay? So let's take a look at what kind of day we have. Today is what? Today's a Fed day, number one. What happens on a Fed day? Most brokerage firms raise margins because they know that retail traders can't control themselves and they don't want to lose their money. So they limit our trading. So it costs $365 to trade a micro and $3,600 to trade a mini, right? As opposed to 40 and 400. Okay, so that reduces the number of participants in the market. So there's less of you that are trading. That's number one. Number two, it's a Fed day, so smart money isn't jumping around like a chicken with its head cut off, trying to earn money. They get paid management fees. They have money, so they don't trade like drunk cowboys to try and make money when they shouldn't. Okay, that's number two. So that means for us that there's less movement. Take a quick look at the chart, and it's what we call an inside day or an inside night. We're inside yesterday's range and value, which is the cost basis. What does that mean? It means business as usual. We had a little bit of a move outside yesterday's cost basis to sell some product. Yesterday, we had a B shaped accumulation profile, which was accumulating the liquidating inventory over 5704, right? That's what causes that kind of big round B area. And we took that and we had some distribution at night up to 5690, but ran out of buyers. So we came back and we corrected inventory back down to the close. Overnight inventory is still long, okay, because over 80% of the volume and time is above yesterday's close. So it's still long, okay? What are our expectations? Our expectations are chop, slow price action, lack of follow through, no breakouts, You see where I'm kind of going with this, right? This makes us aware of the market. So we're not taking, what do you guys call it, YOLO trades, where, oh, I'm going to make 300 points today. Well, it's an inside day. You're not. What did I forget, Tobias? Right? Well, I that's what I'm talking about, right? So what creates chop? What creates chop is what I just said. Okay? What creates chop is what I just said. Lack of traders, lack of follow through, an inside day, and the large traders sitting out. Okay? So, now that we have that awareness, if you are going to trade, make it count. Okay? So, let's go take a look at the market profile. We go and we put all our stops in so we know where the upper and lower stops are. Okay. We are trading right at yesterday's cost basis, yesterday's point of control. Overnight point of control is up here. We had some decent distribution in the overnight. Now we had to put the product on sale. Then we go and we look at our 1 minute candle chart. Okay. We find a balance zone. So, how did I find this balance zone? Well, I looked at that high and that low. And when we couldn't get to that low, we went right back to that high. That means that wholesalers are on both sides of this box. Now, if you want to confirm that, you can go and run a volume profile. Say we go and run a volume profile. Wow, look at that, right? That's where the position is. So that is that back and forth which creates that balance. Okay. Now we know where the position is. So if you want to mark down the position, put it on sale, this is 2 times discount and this is 2 times profit, right? Very simple, right? There's no advanced math. You don't have to make this more complicated than it is. People love to do that because they love to feel smart. That's great. I have no problem with that. But how are you actually going to put some money in your bank account, right? What is the information that you need, right, to actually make money? And what is the information that you need to actually stop losing money, stop making bad decisions, right? So you go through this checklist every day. So now we're set up, we're ready to go. We know where the position is. We know the discount zone, we know the profit zone. Now what? Now we sit and wait for our trade, right? I like to, because I don't like to just needlessly burn money, because you know, I'm not always right. So I am going to make mistakes when I first start trading in the morning. So I'll start trading with the micro and I'll take trades from the edges of these zones back into the middle, right? Look above and fail of 56.82, look below and fail of 56.60, right? Here in the middle of the zone, no trade for me. This automatically takes you out of about 50 to 60% of all your bad decisions, right? Retail traders don't know when to trade because they have no clue of what's going on in the business. So they come up with all these theories, which are based on bedtime stories. They're not based in reality, right? If they were based in reality, they would be looking at inventory and order flow because that's what reality is, right? Raj has an order to buy 1,000 contracts. Does he just go and click market order? No, he will give it to his trader, right? Or his algorithm, which will work that order. right? To make sure he gets the best prices and doesn't drive up the price. This is how business is done, right? That will create order flow that we see reflected in the chart. Right? We don't create that order flow. We try and find that wave and surf it. We have to note we have a poor low in the overnight. That is a poor low. It means in market profile terms, it means that there's just one little tick or one letter of excess. So if we have a double bottom or one letter of excess, that's a poor low. Now, what does that mean in practical terms? In practical terms, it means there's competitive buying at 56, whatever the heck that low is, 60 and a half. Right? So there are buyers waiting there. And when we got down there, they gobbled up all the product and pushed price higher. So as the market corrects inventory, we want to see whether or not we come out and tag this poor low. If that poor low holds, hey, Kevin, if that poor low holds, it means that there are buyers there and we found the bid and you can go long off of it. Now, because all of the inventory of the overnight is above you, right, it'll be a scalp long because they will sell into this, right? So let's go do some market intelligence and see where they're going to sell into it. They're going to sell here, right? The top of the candle, and I can't believe no candle charting book ever tells you this, is where the seller initiates. And that's where sellers are competing. So if you're a short seller and say you were short on the move underneath 69, say you shorted 68 with a 69 half stop, and the offer keeps moving lower, well, you can stay short till 65. And then if we break 65 and it offers under 65 like it did there, you can stay short down to 60, 60-ish, 61, right? Now, when we get to that 61 area, that's where they were buying before. But that was hours ago. Are they still there? Are those bids still there? Right? So now we're going to go deep sea diving and look for that bid. So instead of preemptively trying to buy that level, what I like to do is I like the market to go underneath that level, those sellers to exhaust themselves, those orders to complete, and then the market to come back up looking for supply. And if it holds 60, I'll go long from 60 to 65. Here you can see, look, this is called front running. M period did not take the S or R low. These two candles did not take out 60 and 3/4 yet. So there are some buy orders there that are front running that level. That means that there's buying there. You don't need any fancy software. You don't need any DOM. Look at the red line, how it moves higher as it comes down to 61. Now, if the sellers are forced to sell and compete, it will move lower like it is, and it'll come underneath 60 and 3/4. Watch. There. See? Now let's see who comes into the store. We've just opened an entrance to the store. Are there any buyers? The buyers see that the sellers are a little desperate, so they're dropping their buy orders. The next level will be 59, where that M low is, then the J low, down here at 57 from yesterday. These are the stops. If you're using a half-hour candles chart, it's just the bottom of every half-hour candle, okay? So now we are in the 4 times discount zone. Right? The buyers that were there on the market open, they're not there anymore. Remember, that was 6 p.m. Eastern time. It is now 3:45 in the morning in New York. So this these buyers are gone. They went bye-bye. They're sleeping, right? So let's see if we take out that J low. Hey, Lonigan, how you doing? Now this is a proper liquidation to overnight inventory. Now, what else did I say? I said if this thing actually, if we get enough order flow, right? What were our expectations? To come down and test yesterday's low, okay? But if we accept back over the overnight low and we come back over 56.61, and especially if we get over 62 and clear that standard deviation, we'll rotate back up to where that seller was at 64 and 3/4. You guys catch my drift? Right. Now the buying here is short covering. Make no mistake. Nobody's buying 300 contracts to go long for 6 months. That ain't happening. Not at 3:45 in the morning on a Fed day. So those buyers, they're fickle, right? What does fickle mean? That means that they're not really going to stand in there and buy a ton because they're trying to buy as cheap as they can. So they see that there's a seller at 60, they'll move their buy orders down to 58. Wouldn't you? If supply runs out, they'll move their buy orders up. See, like right there, right there. See? And then when they see a seller, they'll back away from it. This is what creates chop. Chop is a negotiation when business is slow. All right. Chop can be tradable if the range is decent. But a lot of the times, chop is not tradable. And chop is not for you to trade. That is for wholesale and large traders to handle their business. See, look at the lows getting higher on these last couple of candles. Just something to note. Pay attention to small details like this, right? Now let's see if we can take out those lows because there are buyers at that 57 stop, right? The buyers are at that 57 stop. They're front running 57, which means they're buying ahead of 57. Right? So it's just back and forth. The short sellers are trying to squeeze as many contracts as they can out at the cheapest possible price. Hey, Phil, what are you doing there? Okay, see the offer is moving down now, right? Check it out. See the sellers are down, they're moving down, they're competing, right? They were here and then they were here, now they're moving down. But now if they catch a bid, they'll lift the offer. That's the red line, right? If you watch the offer, don't worry about the bid. The bid is the suckers. The offer are the people who own the product. And if they raise price, it means that they've seen buyers. Never short into an offer that is lifting, right? You want to always short when the offer is moving lower, like when it was moving lower here. Here's an area where you know and expect there to be buying, right? That J low, as Phil just said, that's a good place to find responsive buying. See, look, there's the creep. See how it's creeping? So if you're doing a look below and fail of 60 and 3/4, and say you go and put in a 61 and a quarter bid. I didn't get any at 61 and a quarter. Didn't get anyone at 61 and three quarters. So I was right, but I was slow, right? So I tried to buy 61 and a quarter and I tried to buy 61 and three quarters, and it just ran away from me. Yes, the market will remain sideways, waiting for FOMC. Why, DJ Trader? Tell me why. Tell me why, tell me why, as the Boomtown Rats would say. You don't want to tell me why? Risk, 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 risk. Who are the Backstreet Boys? I'm not catching that reference. I'm old, Mike. I'm talking the Boomtown Rats. All right, let's see if we still have that seller at 64.5. There they are. They've just shown themselves. So if you did catch that 61 and a quarter or 61 and three quarter long, right? I'd be losing a contract or two up here, right? Pay yourself. If we get over 65, the next seller is going to be here at 65 and three quarters, right? There we go. That was a nice look below and fail, right? Right. Next seller, 65 and three quarters. There they are. Oh, the offer is lifting. Can we get a print? No, not yet. Wait. Do you see the offer went above it, but nobody wanted to buy it, so they put the price on sale. To make expectations? No, so they manage risk. Nobody with a lot of money goes full tilt trading on an FOMC day unless they've been on a 3-day Coke binge, DJ Trader. Okay? That's not how people manage money. That's why it's that. Have you ever heard of risk off? Risk off means don't run around like a drunk person spending money all over the place. Okay? Risk off means make intelligent business decisions before a volatile price action climate, right? Exactly, Phil. Well, maybe Tony Montana from Scarface. That's the kind of person who's putting a position on pre-FOMC news, right? The expectation, DJ Trader, is that you don't make dumb ass trading decisions if you are managing money. That is the expectation, right? It's a simple business, folks, right? It's a simple business. Unfortunately, you have been blasted with so much BS information and absolute gibberish, right? To try and keep you confused. It's a market, right? It's a market. How do you make money? You do the look below and fail, you make your 3 to 4 points, right? That trade's not bad. 61 and a quarter, 61 and three quarters, selling them at 64, 64 and a half. Take those points, don't give it back, right? I missed that trade. That's okay, right? Now let's see if we come back and hold 60 and three quarter again. But you manage your expectations by knowing where the sellers are going to be. Look, the sellers initiated right where we said they would. They got past the goalie here at 64.5, but at 65.5, bam, they stepped in. Right? Yeah, feel free to be a liquidity provider. Right? Keep it simple, ladies and gentlemen. That's all we're trying to say. Keep it simple and focus on the method in which you do business. That is a trade setup. right? The method in which you do business should be scalable. It should be repeatable. It should have your risk built in. So had I been long at 61 and a quarter or 61 and three quarters, my stop would have been 60 and a half. So that is my risk. My risk is based on the fact, right? My risk is based on the fact that if they have to sell underneath 60 and three quarters, you're using the old contract, mother trucker. We've rolled the contract. That's why your ES is 50 points off. So if the trade doesn't make sense, that means that there's no supply under 60 and three quarters. You shouldn't be in the trade. Do you get hurt by commissions? Yes, if you overtrade. But if you took that trade, caution, on 4 E-minis, do the math. Depends how much you're paying on commission, right? I mean, if you overtrade, if you're doing a whole bunch of trades, and remember the trade that I wanted to take here, that was a test trade to see if it worked, right? What are we paying round trip on a micro? 78 cents and a couple of bucks on a mini? Commissions are not hurting you. Remember, you're not over trading. Does that make sense, caution? Yeah. Two and two two and a quarter per side on the mini, right? So if you make 150 bucks, 200 bucks, is that really hurting you on commissions? I'm not that good at math, but I don't think so. You guys feel me? Everybody wants to make 60 points on a trade. They don't have the skill to do it, right? DJ Trader, let me read out your question. If you're in a trade, whether buying or selling, and a seller or a buyer shows up, how can you tell if they're a short-term trader or a strong operator? Because if you buy or sell to the first person who shows up, you can lose a large part of your trade. Um, Honestly, that's a bit of a fantasy question. What is your level of skill? Are you consistently profitable? Are you trying to get consistently profitable? Make a couple of points, man. Now, if you are, I would invite you, DJ Trader, if you're trading size and you're consistently profitable, give me a DM and I'll work with you and help you on that. Okay? I invite you all, anyone who's trading size, right? If you guys are like trading 20, 50, 100 contracts on the E-mini, if you are trading size, I can help you with that. But if you're just learning how to be consistently profitable, don't worry yourself with all that. How can you tell your trade gets violated? Like, so if I was long here at 61 and the market breaks 60 and three quarters, right? I think that's enough to tell me to get the hell out of the trade. Don't overthink it, right? Don't overthink it. You don't have to know what each order is going to do as long as it takes out your level or doesn't take out your level. Does that make sense? You guys understand what I'm saying? Keep it simple. So now if I was looking for a look below and fail, right? We've distributed volume over 63. If it holds 60 and three quarters, well, you know the seller is going to be here and you know the seller is going to be here, and you know the seller is going to be here. Do you understand what I'm saying? DJ Trader, you asked a question, I answered it. Give me some feedback on whether you understand what I said. No? Okay. Right? Don't trade in fantasy land. Trade reality, right? Everybody thinks that they can make 50, 60 points on a trade. You have to be grounded in reality. Otherwise, you're just going to be disappointing yourself all the time. Okay. You have to just be grounded, be realistic. Okay. If you're trading a $2,500 account, you're not swinging for the fences. Make a couple of $100 here, a couple of $100 there. Build your skill level. Look at that bid. Oh, well, right. Well, I missed that. You think we found the bid? You got it, Dave? Nice trade, brother. Well done. Oh, no problem. I'm not angry. It's just when people ask questions and I answer them and then they disappear, I just want to know whether or not I have to explain it in a different way. Hey, Sam, what's up? Nice trade. Nice trade. Done for the day. Well done. Don't give it back now, right? That was a really nice look below and fail. I wasn't expecting that at all. I was giving DJ Trader grief. I missed the trade. See, that's what happens when you don't focus, right? I was preaching. But we found the bid at 60. So that's good to know. Let's see how much of this we backfill. No, my pleasure. That's okay. You know what, mother trucker? I've done that too. I'm like, holy crap, I forgot to roll the contract. When I We have a video in our room at Microefutures on how to roll the contract, and because contract rollover is really, it can be really overcomplicated. So I have a simple video on step by step how to do it. That's the one sort of kind of pain in the butt part about futures is the contract roll. The symbol changes and you got to do this and change all your references, and but it's worth it because you don't have to pay borrow fees when you're short. There's no PDT rule, and there's great margins, right? Look at that. You can see that there's a seller right here. Check it out. Right at the top of those three candles. That's what the candle charts book should be telling you. That's where the sellers are competing and initiating. So if you were long, right, and you saw that there was a top there, you'd sell into it right here, right? Get paid, take profits. You must. In this market, you have to pay yourself. The problem with these markets is that the ranges are so big, people have their eyes are bigger than their skill. Just like when you put a huge pizza in front of a kid, right? They can't eat the whole thing, but they want to, right? It's the same with traders. Just keep it in digestible chunks, make your money, and get the hell out. Now, you'll hear people say, look, if you've got an edge, you've got to press your edge. And I completely agree with that. But if you're developing your edge, don't try and press what you don't got, right? 10 points is great. 10 points a day keeps the doctor away and the bill collector. I'll take 10 points a day all day, every day on 3 to 4 e-minis. Thank you. Goodbye. Right? Exactly. My whole thing is we should trade for income, right? Don't trade for glory. Because I tell you, you will be disappointed every time. That's a hard road. If you want to trade for glory, go get a job at a brokerage firm, get on their trade desk, and really learn the business. Then start your own hedge fund. But if you're a retail trader, if you can make 500 a day, that's 10 grand a month. Some days you're not going to make 500, right? And that's just business. But just keep developing your skill. Just don't give it back. Get rid of words like FOMO and tilt, right? They have no business in a business environment. Nobody, you ever go to a baker? Hey, you want to do some FOMO baking? Right? Let's do some FOMO brain surgery, right? How about some tilt accounting? Sounds ridiculous when you say it out loud. Seller at 68. Okay, we're going to come back down. Let's see, we're going to come back down into that position at 63. So I missed that nice trade from 61 to 67. And you notice I'm not like freaked out about it, or I'm just starting my day, right? It's 8 o'clock in the morning here. So just starting your day, you're going to miss a trade here and there, right? That's the thing though, mother trucker. Don't get mad. Don't get mad, right? What do you do for a living? You, you drive a truck? Kenworth, Peterbilt, Mac? I'm assuming from the name. Looking for 69 at a quarter. We found some buyers at 66, right? Just pretend that you're at work, right? Just pretend that you're at work, right? You can't get mad when you're at work. You can't, you don't get emotional when you're at work, right? If you're an accountant and you're doing someone's taxes, you don't start crying, right? Just remember, this is a job. It'll help. Reframe how you think about this, right? The thing is, the whole emotional thing has been pandered to by the trading community. And everybody's been mollycoddled into this, oh, pat you on their head because you're emotional, where there's no place in that in a business environment. And if you actually said it out loud, right? If you say it out loud, you'll realize how ridiculous it sounds and you'll stop doing it, right? Every morning I come in and I go, I'm biased short, I'm biased long. I'll say it out loud so I'm aware of it, right? It helps you be aware of what you are thinking in your head. So, because if what you're thinking in your head is not showing on the chart, you got to adjust. And that's hard to do. It's not easy. You got to work at it. That's why you have to have a trading execution plan that takes into account when your bias is wrong, right? So you just don't keep blindly trading with your bias, even though it's wrong. And that's how people get into a lot of trouble. They're averaging down into bad trades, they're averaging up into bad shorts, right? Refusing to admit that they're wrong. See if we could hold 69 and a quarter. I'd like it to come down to 70 and backfill so I could buy some, but I might not be able to get any. There we go. Now it's coming back underneath 69. Does it stop here in the 67s and reverse back up? Because if it does that, that's the trade I'll be looking for to go long. Because we knew that there was going to be a seller here. So no, don't buy it up here. Wait till it reverses back down and then comes back up. And maybe we've cleaned those sellers out. If not, just wait for the next trade, right? No big deal. We've spoken about this, John, because that requires discipline, because that requires discipline and common sense. Both of those things are not taught to retail traders. That's what I'm trying to teach you guys. When people listen, it's great. Yeah, that's why I focus on discipline and common sense. Yesterday was back and forth, right? Yesterday was Here, let's go take a look at yesterday on the candle chart while we're waiting for this thing to clean itself out, right? So if you go back to yesterday, you see these back and forth area here? What you do is you draw a balance, right? So say I was looking at this area here, right? You go draw your rectangle and you just trade from the outside in, outside in. Look above and fail, look below and fail, right? But the thing is, everybody's looking for a trend and they're trying to buy breakouts and all of that stuff. And just trade the rotations, right? That's how you make money. That's how market makers make money, is by providing liquidity in a rotation. Hey Dan, how you doing? Yeah, sometimes, and that's a good thing, DJ Trader. Sometimes not doing anything is a wonderful thing because you learn a lot by not doing. If you actually can sit and watch a market trade, you'll be surprised at how much you notice. When you're not emotionally attached to the outcome, it's amazing how much you can pick up. No one will listen anyway. No kidding, right? Hey Petra, how you doing? Yeah, this whole time change thing is because in the UK we don't change time. I thought it was last weekend, but I was wrong. So we don't change time until the end of the month. So you guys, so it kind of screws up the whole Globex thing. So it'll be back at the normal time back in April. Arizona. What's that like? I've never been there. I've heard good things. There's a lot of Canadians in Arizona. Hey, Marco, what's up? Yeah, I don't know. I had a bunch of friends buy houses in what was that place? Scottsdale back in the late 90s. Nice work. Nice work. Right? 66. There's a seller right here. And then, of course, this will be where your sellers are if you are long off of that. I need some more coffee to put some more trades on here. I'm slow. I'm missing trades. I was looking to short that when we did a look above and fail of 69 and a quarter. I wanted to short 68 down to the bottom of those candles where it's going right now, and I missed that trade. I've missed two trades this morning that were kind of very obvious. So it means that my mental discipline is not what it should be. So got to work on that. Hey, Shaz, what's going on? Yeah, there's a ton of Canadians there, right? One of my buddies actually sells real estate down there. I haven't seen him in 20 years. Oh, nice. Yeah, it's a beautiful sunny day in Liverpool. Look at this. Do you notice this, folks? Do you see the bottom of these candles here? I'm just going to make this green. This is where they stopped selling. You notice they came here, looked below, came back up, stopped selling, stopped selling, stopped selling. Right when you get this level. I'm a little distracted, caution. And I also have to tell you, I'm on my crappy coffee because I ran out of the good stuff. So I'm on the low octane caffeine, right? I'm 57 now, so the old brain, the old synapses don't fire as fast as they used to. And why am I losing internet? What's going on with my? Can you guys still hear me? Oh, look at my Sierra chart. It says connecting. I lost my connection to Sierra. What the hell's going on there? The chart's moving, but it says it's connecting to the server. I don't know what that means. I don't like that. That's so weird. And that's another thing with me. I'm superstitious. We're not superstitious, but as soon as I start having any kind of data problems like this, I won't trade. Right? I can see the offer moving back and forth with the bid. Right? The chart's not really printing. Right? Ugh. Does anybody else lose connection to Sierra? Uh, on these two systems, I'm using, oh God, Iron Beam. That's okay. I don't mind taking the day off. What does it say here? Error connecting to data or trading service. Okay. Yeah, I'm using CQG on here. My internet connection's working. So it's just, there we go. They're back. Woo! Just enough to give me the willies. I do not like trading on Fed days, right? I really, there are certain times of the month. I've been doing this 33 years, right? So Fed days, um, month end, quarter end, year end, that's when I kind of take it easy. Here's something that I'm going to let you guys think about. You know, they have those they have those ads, right, for retail trading where they're trading on the beach, they're trading on the boat, right? No data issues yesterday, Dan. Just now. That was weird, right? Your goal as a trader, right, is to make enough money during the week to take Friday off, to take the end of the month off, to take the end of the quarter off, right? Go on holiday at the end of the month. Go on holiday at the end of the quarter, right? Be sitting on a beach when everybody else is chasing their tail. Once a month, you have to reconnect your connection to Sierra. Oh, interesting, Moran. Thank you. Mind you, in this day and age, data problems are only really bad when there's a ton of volatility. God, back in the 90s, you'd lose connection all the time. And the software was like 2 grand a month. So, anybody old enough to remember Dow Jones Telerate? Okay, so we're coming back up over 69 and a quarter. Yeah, just don't get me canceled, Dan. Okay, we all know what happened to Don Cherry, which is funny because if you actually worked in the industry, we all just we're just absolutely rude on trade desks. See, that seller is still there. The top of the candles, that's what you got to watch for, right? The candle tops, that's where the sellers initiated and pushed price lower. That's where they started competing. They're going to sell there again, right? So once we clear this 71 and a half, right, it'll stair step up, back up these steps to 73 half if we have the order flow to do it. Okay. Got to have the order flow to do it. Yes. And that's a good thing, DJ Trader, that you mentioned that. And I posted it on my X account. The order flow in these markets, right? Because of electronic trading is so efficient that when a large order enters the order book, the bids and offers will part like the Red Sea so fast it makes your head spin. And what ends up happening is you get these big green and big red candles. So you always have to trade with a stop, right? Trading without a stop is like playing Russian roulette with your money. It's only a matter of time. Bearish plays? Shaz, you've been with me for some time now, brother. What are you going to do today? Come on. What do I teach you to do every day? I just don't understand the question. We're not on CNBC, right? Okay, that's great. Now you got a thesis. How are you going to make some money, brother? Right? Come on. Back to earth. Come on, brother. Come on. Come back. We're waiting for you here on earth, right? What are you going to do? What do we do every day? Right? I'm not going to yell at you, right? I'm just trying to bring you back to reality, right? So that's great if you got that expensive suit, you're on CNBC, you just had a nice haircut. Jesus Christ. Okay. We'll talk later, Shaz. Okay? All right. All right. There you go. Tag 69, seller at 71 and a half. Not much to do right here. Folks, don't try and figure out longer term plays on an FOMC day. Just trade the levels, right? Keep it simple. Keep it simple, okay? Don't get too big for your britches. What is FOMC, John? It's the Fed day when Powell says if they're going to raise interest rates or lower interest rates or stay, right? Federal Open Market Committee. Yeah, that's why margins are more, John, right? Because brokerage firms don't want us to blow all their money. There'll be volatility at 2 p.m. when the interest rate decision comes out. So don't be in a trade then. Why does the book get then the first seconds every half hour? It's just risk management, mother trucker. It's just risk management. You see, everything in this business is about risk management. If you work on the institutional side, everything is about risk management. If you're a retail trader, everything is about chasing profits. That's the difference. Because on the institutional side, we say we're going to be here for 20, 30 years. We got to make sure we're in business tomorrow and the day after and the day after and the day after. The money will come, right? As long as you don't make bonehead, dumbass business decisions, you will make money. All you have to do is be there to be in business the next day. And that's it, right? Common sense, folks. Common sense. Okay? Have a great morning. We will see you in RTH at 9 a.m. Eastern Time. Please stay out of trouble. Okay? And if you do get into trouble, don't get caught. And always remember, folks, don't take candy from strange market makers. Thanks. Have a great morning, and thank you for joining me. Come visit us at microefutures.com. Bye for now.